Hello and welcome to this edition of Daily Actives brought to you by Bootleg Macro. I am Dustin and we are looking at Tesla once again. This stock was barely changed today. It was up 0.82 basis points. Now, the one thing I will say about this is that we are currently seeing it at $271.99. I do like when we look at this chart, it looks like Tesla essentially gapped up, kind of went sideways as you'd expect when we review the volatility. This is kind of what we'd expect. And now it looks like it's starting to move up. Now, what I love to see here is that essentially we didn't have a gigantic change in volatility or volume, but we did see that the volume ended up coming off of 3 standard deviations below and getting into its normal distribution of what kind of volume you'd expect in Tesla. Now, we do see that we've got back-to-back green days, but we are still negative on that 5-day rolling. We've actually gotten more negative than we were yesterday. And the change that we notice is that we're now negative on the 15-day rolling. Now, I'm not convinced necessarily that this is going to be the death knell for Tesla. It's going to go back to 200 or even 100. If anything, this is probably a setup for the come up or for the future, because right now we don't necessarily have a go long signal in the short term. We do have one on the intermediate term, and it looks like we just lost one on the longer term. We look at the trend here. It looks like we've actually gained a bearish signal on the short term. It looks like tomorrow we're about to lose one on the intermediate term, and we're still bullish on the longer term. Now, if we look at the overall sentiment here, one of the things that I'd like to highlight is this 2-day, 5-day, and 10-day averages. These are in the mid-50s. You do want to see them around the mid-50s or at least above 45. You don't want to see them in the high 60s, because when we get in the high 60s, while Tesla can do this, not every stock can do this. Generally, when you get above 60%, where you see it with the red lettering with the white background, that is not good. Usually what will happen is things will start to roll over and you'll get a falling bear. But even in Tesla's case, you got a falling bear at 264. I guess it really didn't break that for a while until we got to 279, 282, 276, 274. Then we've come right back down. But the type of moves you see in Tesla are not the same that you see in every other stock. And the reason I say that is because everyone loves this stock. It is not just memeable, it is quotable. The CEO is creating not just a company, but a movement. And you can see it when we look at this chart. Essentially, we've filled this gap, and now it looks like we've essentially set up a base since it looks like what here, the 20th of June, we've gone up, we've gone down, we've gone up, we've gone down. I bet we go back up. And the reason why I say that is because if I look at the daily sentiment indicator, when we were making these highs on June 21st, just like I was talking about here on the 21st, you can see that we were already at what? 70%. We were at 70%, and now we're down at 54.2%. All I would be looking for would be a resumption around that 50% level. And then as the green starts to break back out above this 15-day moving average, I'd say it's time to go long again, because Tesla, when you look at the volume, as it's been going sideways to down, the volume has gone down as well, which shows that this is more of a counter trend rally. It's not really where the support or the demand is in the stock. And I don't hope you don't confuse that term support in terms of like support and resistance. It's really about the idea of where is more in control, supply or demand. We can see that the volatility continues to fall. And one interesting part is that the price correlation continues to now go negative. So as the volatility is falling, now the correlation is negative, you'd actually expect the price to go sideways to up. Maybe not in big moves, but at least should be going up towards the top of the range. I'd say 290 is in the cards, boys and girls. It really depends on what you think, though. Now we can see in the ultra fast sentiment indicator, we're down at 55.9% after being as recently up at 70% around or 68% on the 21st as well. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, do yourself a favor. Subscribe to the New High newsletter. It comes out Sundays at 9 just for you. I'll talk to you soon.